So you guys are aware. Um, all right, so welcome to our second class. This is going to be our day trading class. Now, again, we're going to focus way more on the charts, indicators, but again, it's still going to be like we're going to peel the onion back a little bit more. So some of you have been using the indicator for a year plus or whatever the case, have more experience. Again, this may be a little more basic. However, there's probably some really good information here that every single trader, regardless of your experience, needs to either learn or be reminded of. And we'll get into that here later in the class. So, um, again, you guys should have access to the indicator already. You should have access to TradingView, to your charts. Um, and if you don't have access to either, I can help you with that after the class. Okay. So I'm new to trading stocks. Where do I start? I get this question a ton. And again, this is focused on the day trading side of this. So you're going to have different answers for long-term investors. I kind of got into it, not into it, but had a conversation with someone on the Discord the other day. And he seemed to be more of a trader to me. But I was talking about long-term and how long-term investors can take advantage of things. And he made a lot of points that really seem focused more on maybe longer swing trading. So you really need to know your approach. And I think I am going to separate that into a third class swing trading. Um, so again, this is focused on the day trading, so keep that in mind, okay? So number one, first and foremost, you need to manage risk, okay? And I see this happen. This happens to probably all of us when we come into the trading world. We're looking at how can I get these monster gains? I saw this penny stock CEI run for 200% the other day. How do I get in that? And they invest in that and they lose all their money. And that's something we'll cover a little bit more in another class as to why penny stocks can be corrupt and why they're allowed to do that and why I think you should probably not take advantage of that. But that is a style of trading, day trading, that we're probably not going to cover too much in here. Hey, if you have success with that, by all means do it. But if you're not having success with that, maybe, and you've tried for maybe a little bit of time and continue to lose money, maybe try something else. And I'll give you some options on some things. The reason being is with stuff like that, you're not managing your risk. You're trying to catch a pump and dump penny stock at the perfect time. And if you don't, then you lose money. If you do, it's like a lottery ticket, essentially, is what it is. So if that's what you're going after and you want to play the lottery, that's perfectly fine. But you're not going to invest half your portfolio in a lottery ticket, right? You're not going to empty half your bank account and go play the lottery, right? That wouldn't be wise, you know. You managing risk is huge, huge. These numbers can vary, but again, this is just kind of guidelines as what I look at. You really shouldn't be risking any more than 10% of your day trading portfolio at max per trade, okay? So, by nature of that, you're preventing yourself from losing no more than 10% of your portfolio. So, if that trade goes terrible and you lose all your money, guess what? You lost 10% of your portfolio. Now, you can come back from that fairly easily, especially with day trading, especially because it carries greater risk. But being that day trading carries more risk, you don't want to keep piling that risk on. You kind of want to look for safer avenues of day trading. And one of those things that I've found is day trading SPY, whether it's or the S&P 500 through ES, MES, through futures, through SPY options. Um, Instead of just going with like penny stocks or penny stock options or something like that. You already have plenty of risk. You can already make 100, 200, 300% gains off this, if that's what you're looking for. Why do you need more? In my opinion, that's way more than you would need on any given trade. Make sure you're managing your risk. And again, for you, you may say, "Hey, I don't want to risk any more than 3% of my portfolio on any trade," and that's perfectly fine. Um, but my point is, you should be managing your risk in some way. If you risk 50% of your portfolio on a trade, guess what? And it goes badly, you can lose half your portfolio. That is extremely hard to come back from. And if you guys remind me, I don't have it in this slide, but I like to share a metric. Let me see if I could pull it up real quick for you guys. Um, what would it be? How to make, why am I on caps lock? How to make, um, or how much percent you need to make up after a loss in the stock market. Let's see if that does it for us. Da, da, da. Where's my, this will do it. Where's my image? Here we go. Okay. So this is what I'm talking, this is the graph that I'm talking about here. Okay. So it's kind of a bad picture. I clicked on like the first one I saw, but so if you lose 10% of your portfolio, this is what I'm talking about here. So if you took a 10% loss to your portfolio, you would only need to make 11% of that gains, profits back from that to offset that 10% loss. Okay. Now, if you take a 50% loss to your portfolio, you need to make 100% gains back in order just to get back to break even. Okay. And obviously, if you're playing, more dangerously, it just becomes worse and worse the more you go. If you take a 90% loss to your portfolio, you have to, this is why people who take these massive massive losses, they never come back for them because they're constantly having to do these ludicrous things, gambling, gamble to the highest degree just to get back to break even. Okay. So smaller losses, smaller you need to come back from. Okay. So that pretty much sums that up there. um any questions about any of that? Okay, if so, just pop them in the chat and I'll get to them at the end, okay? Because I'm not gonna look at the chat probably towards the end. Um, Okay, how do I read a stock chart? All right. And again, we're going to cover like the super basics here. I'm not going to teach you like all this wild stuff. I don't follow crazy patterns. And don't get me wrong, again, if it works for you, and these do work for people. For me, that's just not something I look at. For me, I'm more looking at, I will look at, and we'll cover this later in the class. I will look at, gaps filling. I will look at um, uh, candles wicking after big moves, and again, we'll cover all that stuff. But and then sometimes I will take note of like bearish engulfing or bullish engulfing candles, stuff like that. That's like super basic on the candlestick side. I won't dive into like anything deeper than that. Even though that stuff may work, it could counteract the system that I have going, and the system that I have going is working already. So I don't want to overcomplicate that. Does that make sense? Um, so let's keep it basic here. All right, go ahead, open your trading view, guys. Um, And if you haven't already added the MT Super Orb indicator and or the infinity indicator, you can add those, okay? And I'll go into essentially what each does. And right now, I'm more pushing the Super Orb. However, we do have people in the community who have been using the infinity indicator for like over a year pretty successfully, and they don't, they're not going to change. They like using the infinity indicator. They're having success doing that. So there, again, it's whatever works for you and your system. Okay. You're going to be using either the 1, 2, 3, or 5 minute charts. It kind of depends. I've been more on the 2 minute a lot lately. You're not going to see a huge difference between like the 3 minute or the 1 minute. But it's for very quick trades. That's kind of what I'm getting at. If you want something a little longer, you can go with like the 5 minute. I haven't tried the 15 minute. You could do something like the 10 minute. None of these are going to make huge differences in the long run. Um, and I'll get into the advantages of each a little bit later. But essentially, in a nutshell, if you're using a lower time frame, you're gonna trade more false signals for getting into plays sooner. Okay. Um, so now what we'll do is we'll go to the charts and I'll show you each indicator, but first we'll cover some very basics of charting and candlesticks in the next slide, so you guys kind of know what you're looking at, all right? So how to read a basic stock chart. We don't go looking again, we don't look for any crazy patterns, but I do pay attention to certain candles, which I'm going to get into in the next slides. Again, I'm not saying these things don't work. They just seem to muddy the waters with what I'm doing, you know. If you have too many indicators up on a chart, you're going to have some that contradict each other, you know? So which do you follow? You know, now you're going to start to get in your head, yada, yada. You do not need tons of indicators to have success in trading, okay? Um, all right, candlesticks. Candlesticks, by the way, these are candlesticks, okay? These are these little, if you guys don't know, these are the little bars on your chart, okay? So what do I look for on candlesticks? And ignore this, I'd use the AI program that, they didn't have stock candlesticks and, so ignore the pictures. But basically what I'm looking for are candles that wick to the opposite side after a significant move in one direction. I'll show you some examples here in a minute. So what this shows me is that either buyers are sellers are finally stepping in after a move in the opposite direction, essentially. Generally, this also means that institutions are buying at those levels, again, giving me more reason to enter them and swim along with the big fish. Okay. And you never want to fight the trend or institutional demand. You never want to fight these guys. They're gonna win. All right. They have the firepower to win, and they are going to win. So you want to side along with the institutions. You want to ride along with them. And whenever you see their footprints essentially, and we will cover it even deeper into not only order blocks but watching order flow, and institutions will leave
Big.
footprints,
Good boy. Can you
big
spin?
orders
Spin.
when they want
No.
them to
Spin.
move the market
Good
in a certain direction.
boy.
Go ahead. Hello. Sorry, did someone say something? Hey, what's going on? Sorry, let me see. Jake, I think you unmuted. What's up, bud? You good? Okay. All right, I'll assume you're good, and we'll just keep it moving. Um, all right, let me get back to where I was going. Okay, so again, long story short, you don't want to fight the institutional demand, okay? All right, another thing I'll look at is what is a gap on a stock chart, all right? And we'll cover fair value gaps in another class. Again, I want to feed you the information that you need to know first, and then we will peel back the onion more as we go. I want to keep it more basic at first, and then, okay, after we have to crawl before we walk, before we run. You know what I mean? So, what is a gap on a stock chart? So, a gap is just an area on a chart where there was no trading. Okay. Hold on, let me make sure that I cover what I was talking about. Okay, so I'll cover that in the next couple of slides. What we just talked about with the wicks and everything. So the other thing I'll look for is gaps in trading, okay? And a gap is just an area on a chart where there was no trading, where there was so much demand that it just shot up and we missed a bunch of orders that were sitting there. Because if you look at the tape, there are orders sitting all over. If you go put a limit order in at whatever price, you're saying, okay, well, I want to buy here at this price, and you put that order in, right? So, well, that order sits there, and that order will only fill if there is another partner. I mean, it's just like buying and selling. If you wanted to, buy a or sell a car, you would need a buyer at the price that you're asking for. That's something that I think is very basic that I think maybe not everybody understands with trading. Well, why didn't my order get filled? Well, you need to have, your price was too high. You were asking too much, and the order never filled because there was no buyer. So you were trying to sell at this price, but there was no buyer at that price. So no deal was made, and your order was never filled. Now, something very important to understand is that many times when price action jumps or jumps up or jumps down, and you get that gap, many times, I would even say more often than not, price will return to quote unquote fill that gap where orders are still sitting to find liquidity before making its next move. So keep that in mind while day trading. It can be extremely helpful. Okay. And the last part of all this that will all kind of come together for you guys here in a second when I show you on the charts is using higher time frames charts for guidance. Okay. So what I'm talking about is looking for those gaps on, like, say, an hourly chart or a daily chart, okay? So, well, this didn't come out all that great. I wish I could edit it. Okay, so come on. All right, so let's see if I could read what I tried to write here. What I'm going okay, so you're gonna enter the trade on a lower time frame chart, right? So you're day trading. So you're gonna use what? A 1 minute chart, a 3 minute chart, whatever the case may be, a lower time frame chart to enter a trade. So what I'll often do is I'll zoom out and I'll look for guidance on the longer time frame chart, like say an hourly chart or a daily chart, and look for guidance. So, for instance, if I look at the daily chart and see a gap to fill, then I will look to trade that gap fill. As long as the conditions exist for my trade still on the lower time frame. And again, I'll show you this in a minute. Or if I look at the hourly chart and I see a candle wicking up after a big move down, then I'll look for to enter a long or a bullish trade on a lower time frame chart. Okay. So I'm looking at the hourly chart for guidance. Okay. Which way is the trend? Do I have something like a move coming? And now here we'll get to the charts and I'll show you. You can either follow along at this part, or you can just watch my screen, okay? Um, so I'll give you examples of both here. I'll give you examples of both a gap filling and a candle wicking, okay? All right, so let me go to. Okay. So here's SPY. And when I look for actual physical gaps, um, so again, this is a very good point. So on lower time frames, I'm always using extended hours trading. Okay. Um, when I'm on an hourly chart, I'm on regular trading hours, and this helps me more so see gaps. And what it does, it just takes away the after hours action, which can sometimes be a little bit misleading, maybe. So here today, we actually do have a gap here today. And oh, another thing about gaps, they won't always fill all the way. So usually when gaps will fill, they'll seem to fill about 75, 80% of the way or more. But usually after they fill a certain amount of time, they fill most of the orders, then it will uh, um, it will quote unquote have been filled. Now this gap is still in progress here, so let me see if I can find one that's a little more obvious that has already played out. Okay, here's one. So this was back from a couple weeks ago. Okay, I can't remember why we gapped down here. Um, I'm sure if you looked at the news, you know there's probably maybe something. But we gapped down here. Okay, you guys see how there's a physical gap here in trading. So if you're looking here, right, there's no physical gap here. There's a couple fair value gaps, which we'll get into, but there is no physical gap here. So right now we're just covering the very easy to see physical gap. So there's a literal gap here, and that's what we're looking at. So we gap down, okay? And so from Friday to Monday, so over the weekend, something likely happened that shook people in the markets, and we gapped down. Okay, so then what happens is we came and we retraced and we filled this gap. Okay, so we came back up and we filled these orders, and then we continued on the trend that we were going in. Okay. Um, and it's really as simple as that, okay? So you're looking at gaps. Now, am I automatically just going to enter a trade because I saw that we have a gap down? No, no, of course not. We're still going to look at our conditions for a bullish trade because we'd be looking to fill the gap, right? So we'd be looking for conditions on a bullish trade to fill that gap with. Okay, so again, we're on oh, I'm sorry, this is the 3 minute chart. No wonder it looks funky. It does work on lower time frames too, though. Let's be clear about that. I thought that looked a little funky. Um, but what I want to do is um, I want to show you. Okay, so here, same thing, right? So on Friday, August 29th, we gapped down, okay? Tuesday, what was that? Memorial Day? Um, so Memorial Day weekend, it looks like, because yeah, there's no Monday. We just went into Tuesday. So we gapped down here, came down a little bit more. And actually, I think this was a key level, 634, if I'm not mistaken, which I forgot to cover in here. We'll cover that in the next class. We're not going to have time anyways. And then we came back up and we actually gapped back up. Okay. See how there's a gap there? And you can see we then came back down and filled that other gap, right? And then headed back up to where we were going. Okay. So these little gap that, and again, it happens all the time. This isn't like a uncommon thing, okay? So that being said, so this happened again Friday, August 29th. We gapped down, and then Tuesday morning, this is where we were open. So if you just said, okay, I'm entering again, we're going to focus on day trading here, not swing trading because it's a different approach. But if you just said, okay, well, we got down, all right, let's head back up. Let's go long here. Well, you would have got your face eaten off. Now, if you didn't close the trade, or you had some wild stop loss, or you were just gambling, then eventually you were okay. As by the end of the day, we were back up. But again, that's a whole day of trading that you were negative, so that's why we don't just blindly enter trades to fill gaps when we're day trading. When we're swing trading, I still don't like doing it, but you can see how you can have more success doing that. Um, so that is gaps. So this again, we gapped out on the hourly. Let's go to the lower time frame now on the September 2nd at 9:30. Okay, so we're gonna go let's go to like the 3 minute chart. What did I September 2nd, right? Okay. September 2nd. Here we go. Okay, let's zoom in a little bit. Okay, here we go. Here's like I said, this works on lower time frames also, right? So here's the gap. All right. So again, when you're looking at charts, and this is again something that really gets lost in trading sometimes, is especially for newer traders, is when you're using different charts and time frames, and I say I'm going to the hourly, I'm zooming out. You can see what I mean by say I'm zooming out, or when I go to the lower time frames, like a 3 minute chart in this case, right? I'm zooming in. Okay, so now this gives me a more detailed picture. I get a more detailed picture of the gap. Everything looks bigger, right? Because I'm zoomed in. Okay, so we gap down, and again, if you just blindly entered this trade here, I mean, yeah, you probably could have made some quick profits here. But it could have gotten really ugly for you until we started rebounding back up. Okay. Um, I don't want to like overkill this. Does anyone have any questions on gap filling? You can unmute yourself. I'll take a second to look and see if we have any questions in the Zoom. Um, If not, just stand by for a second. Okay, cool. So I'm going to assume that I was pretty clear about um, explaining gaps. And again, if you guys have any questions and you don't want to bring it up right now, we can cover that at a later time. But this is really something very, very simple that's that a lot of day traders don't even look at. And if you look, sometimes if you zoom out and look at the bigger picture, say, oh, okay, this is happening, then I will only take bullish trades, and you have more success. Um, the other thing I wanted to cover is what we went over on the wicks. Okay. So wick ups, wick downs. And again, if you're day trading, you're probably looking at something more like the hourly chart. You could look at the daily chart, or like the 4 hour chart, probably might make more sense. Um, because those, again, I mean, you do get gaps and wicks on the daily chart. It's just by nature, you are on the daily and weekly chart, you are way more zoomed out. Okay, see how you still get gaps here and there. on the daily chart. But you don't want to zoom out too much. Like you don't see me on the weekly chart because if you zoom out too much, then everything you're doing, yeah, it makes great more sense than for like swing trading or longer term trading. But with day trading, it just doesn't make any sense. Okay, so that's why when I'm day trading, I'll look at like something like the hourly chart for quote unquote guidance. Okay, so I showed you the gap fills on the hourly. Let me find you an example of. God, why is it doing that? Let me find you an example here um, of a wicking candle after remove. Actually, we kind of have one right here. I wouldn't be surprised if we, number one, fill this gap right here's a perfect example of actually a world example. And I'm not saying this is going to be 100%. Nothing in trading is 100%, okay? But what you're looking for is you're looking to increase the probabilities of your success, okay? So when you look at things right here and you say, okay, we gap down. Not only that, but we came back down, right? And we're seeing buyers step in here. And what shows us that we have heavy buying pressure here. We have a wick here, right? We have a wick here, and that could be enough to enter. Obviously you want to go to a lower time frame now and look for entries, but you would be looking for entries into what? Long or short positions here? Anyone have an answer? You can type it up in the chat. You can unmute yourself and answer. But I do want to make sure you guys get this because we do have a real world example here. And then I'll go back and I'll show you some other ones. So, um, anyone have any guesses on whether you would be looking from seeing this right here, this excerpt right here? Okay. So this gap right here we're looking at, and then we also have a wick. We're wicking up here, right? After we had this nice move and even a gap down. And then this wick right here, maybe I'll zoom in a little bit more so I can show you guys a little bit more how substantial that wick is, right? So would I be looking to take long trades or short trades here based on what you can see here with
I
us
would
gapping down and a big wick here?
I would say
Anyone?
I would say long
Yes. Yeah. Why?
because the wicks are going up, and you have the long one on that first candle there is well, I forget what you call it, but it's a what is it when it's that long? They do a dump or something.
Um,
Sellers or
so all this is saying is
yeah,
buyers are stepping in.
right,
Like realistically, it would be nice if like but nothing's ever going to be perfect, right?
right, right.
Um, but in general, when you look at this candle, right? This candle is saying what? Okay, that
More buyers than sellers.
Right, right, exactly. You have way more buyers than sellers. And look, this is happening in real time here, right? And
Yeah,
now we're looks like we're starting our move up to fill this gap. I mean, there's not a huge gap, but there's
yeah,
probably enough to make a few bucks on this trade. And again, the second part of that is the gap, all right? The physical gap here, okay? And we'd be looking for us to come up and fill at least the majority of this gap. And again, I'm not saying you wait exactly for that moment to take profits. No, but my point is you're going long here. You know what I mean? And you can see we're starting to see. Look, everyone else can see this too. This information is available to everybody, right? So everybody's seeing this, right? So sometimes it becomes a self-fulfilling prophecy. Oh, we have a gap, right? Oh, we're waking up. We have buyers stepping in, right? And coupled with the likely institutional demand here, that's telling us, hey, we're go long, and again, you can dump back down to the lower time frames and look for those conditions to go long. Um, but so that's what we're looking for, just to kind of stay on topic here. Does anyone have any questions on gaps, what to look for filling gaps, candlesticks, and wicking, what we're looking for wicking on candles, stuff like that? Anything? Okay, cool. I'll continue on then. Okay. And the other thing we can use is the infinity indicator as a higher time frame. Okay. So you can use the infinity indicator as a way to validate a trend. And all you're doing is, you can go to a higher time frame on the infinity indicator. And so if our infinity indicator says a buy signal on the hourly chart, then that's giving you a green light, and you would only look to enter bullish trades. Um, so all this stuff is like different ways to skin a cat, if you will, and please don't hurt cats. But what I'm saying is, I'll show you an example of what I'm talking about here. Um, so let's go to the infinity indicator here. Let me see. Let me just make sure. Let's turn off our orb for a minute. I think that's the only one I had on. Okay. All right, so this may be a good example actually. So on the infinity indicator, see how we're coming up to fill this gap right now? Um, it looks like we're not going to get a good example, unfortunately. Um, I was hoping we were on a buy, but we're not. We triggered on a sell. Um, but regardless, okay, I'll still show you. So if the infinity indicator, it's on a sell right now, right? So I would look to take short positions on a lower time frame, okay? So from there, I could jump to the 3 minute chart. Oh, hold on. You see something. So now I want to go to the 3 minute charts. Okay. And then according to this, I would only take the sell positions, okay? And if you look from when we actually got that actual sell signal, again, you could have traded this after hours. So while that sell signal, and that's the thing about this, while I've personally moved away from using the infinity indicator as my main trigger, if you will, is because it works great when that sell signal pops up. Okay, great. I'm only entering short positions, right? No long positions, short positions, right? But then towards the end of that, that's when it starts to get right. Only enter short positions, right? But now that we're at the end of that, and you take in, if you were to take in some indications like the gap down. Now we may fill this gap and start heading back down, but you could see here, um, following the gap that's there kind of supersedes, in my opinion, the gap and the wick definitely supersede following something like the infinity indicator, quote unquote, only using sell signals, right? I mean, it still works to an extent. You got your face eaten on this one, but again, that's because why? Because we gap down, we're filling that gap right now, and we're wicking up, right? So this wick, right? This is the wick right here, right? So this is your wick right here, okay? On the hourly chart, right? When does this come? 9:45 to 10:30, right? So if we go to the hourly charts, um, oh, that's right. Where's my? And again, on hourly, I like to be on RTH, right? So that was our wick. Okay. So, and again, just to be clear, I like to be on regular trading hours whenever I'm on an hourly chart or more. Okay. If I am day trading or looking to enter day trade stuff like that, using like I don't use the 30-minute chart personally, or I rarely use the 15. But anything under an hour, I would flip to ETH. Okay. Um, and now we're got about 15 minutes left. I do want to show you the two indicators. I think those are the last two things too. The infinity indicator and the um, uh, super orb. Okay. So I showed you how to use the infinity indicator as a higher time frame. And if you guys would like, I'll actually put um, this presentation up for you guys as well.
Thank you.
Um, mhm.
Thank you.
Infinity indicator, how to set it up. Also, I hope you guys like all the like bells and whistles. AI helped me create this. I never knew about this little like AI picture tab, but it helps spice up the presentation a little bit, which is nice. Um, Okay, so the infinity indicator, and I'm only going to briefly cover this because if you really want to learn how to set this up step by step by step, I have two videos out which I will post for you guys, or you're free to, where I talk about setting this up. Okay, and. Right. The best thing about this is right now, and when we first came out with the infinity indicator, there were actual things you had to do, like to set it up properly. There's really not anything nowadays. I have that all coded in, and there's really nothing that you need to do other than make sure that you're on an extended trading hours, type thing. So. As far as the infinity indicator goes, there are a few options that you have though, okay? So again, for the infinity indicator, you're going to need access to this. Again, if you can let me know if you're a premium member, I'll get you on the list. If you're not, you want to take it for a spin, I'll give you a free trial. But you need to let me know so I can give you access to that. And that's for either the infinity indicator or the super orb, okay? And I'll just briefly cover how to set it up. So it's going to be in your invite only, or you can just type in infinity indicator and it'll come up under your community or is it community or favorites personal? I thought it was under invite only, but um, hold on one sec. Oh, okay, that's my old one. Infinity indicator. And the one you're looking for is going to be version 1.16. So you would then add it. Oops, there it is. Okay. Let me just kill all this. I don't even know why I have some of these up. I don't really use them anymore. Oh, I will keep that one up. And I'll keep this one up too because it's a free one if you're premium, I think. Or TradingView premium, I mean. Um, okay. So the infinity indicator. This is how it looks just if you add it. Okay. Um, so again, we're going to be on lower time frames. You can be on something like the 3-minute chart, the 5-minute chart, the 4-minute chart, the 2-minute chart, whatever. You're going to have, it really depends on you. Okay. If you don't know where to start, start with a 3-minute chart. Okay. That kind of splits it right in the middle and you can adjust from there. Um, So again, all you're going to be looking for is to enter on sell signals and buy signals. Again, this is a more primitive indicator. It was our first indicator launch. It is still very solid. And this is what it looks like right when you add it. Now, there are some options to it. You can choose to have repeat signals on or off. Okay, so when I turn repeat signals off, I lose that cell signal, right? So I'm just getting the initial moves here. Okay. Or you can have it on, and that will give you more opportunities to get into plays. But obviously, with more signals, you're going to have more what? False signals. Okay. So that's totally up to you whether you want repeat signals on or off. By default, I have it on. It's totally up to you if you want it off. I do have some of these other filters that you can play around with. The one thing you need on is the MACD filter. And you can play around with these other filters, but you don't need to. Okay. Um, and the one other thing I would say that you can play around with other than the repeat signals is the higher time frame signal, okay? Now, right now, it's just going off the chart, so there's no higher time frame. Remember I said, hey, you can look at the higher time frames and use that as a guide. You can also do it automatically, all right? So you can say, oh, I want to look at the hourly chart. So now, since we're on a sell signal on the hourly chart, then we're only going to get sell signals on our infinity indicator. Okay. Um, Now, when that flips to buy, like over here, we were at a buy signal, right? So we will only get buy signals um, when the hourly chart is on a buy. And you can switch that to any time frame. Does that make sense to you guys? I'll stop for questions because maybe I can explain that better. But if you understand what I'm saying, then there's no reason to. Um, does anyone have any questions about that? That's totally up to you whether you want to use the higher time frame or not. Obviously, you get way less signals, but you can see here, right? I mean, you can get some pretty good signals based off that. Okay. Um, all right. I'll assume you guys have no questions. Again, you can ask on. And last thing I'm going to cover is the super orb indicator. Um, I wish I had some more time, but all for the other stuff. But we're actually towards the end of the presentation, I believe. Yeah. So, all right. So the super orb indicator. Um, so again, first thing you do, add the indicator to the chart. See me if you don't have access. Okay. And using the super orb is very straightforward and simple. Again, it can be used on the 1, 2, 3, 4, 5 minute time frames. 10, I know it can be used on the 15. I haven't tried. You can probably get away with it though. Um, and again, the lower time frame you're on, the more false signals, but also the more accurate in general it will be. Okay. And it's very simple to use. Again, same as the infinity indicator. A buy signal you go long, sell signal you go short. Okay. So let's go to the chart and I'll show you what I'm talking about. Oh, and the one feature we've added recently is the institutional order block feature, which helps us show where orders are being placed. If we follow institutions, we'll make money alongside them more often than not. Okay. Let's go to our chart here. We are on extended hours. Um, let's take away our infinity indicator and let's add on our super orb. Okay. Um, so these are the order block. Um, Let me see if I can find. Okay, here's a better one. So these are the order blocks here. All right. And what this is doing, this is it's helping us show where the institutions are essentially putting in bigger orders, and they're literally pushing the market down here. Okay. Um, so we got our sell signal. Again, this is on the 1 minute chart, and I'll show you here why I said, oh, it doesn't really matter all that much if you use the 1, 3, 5, whatever. Um, but I personally like using the 1 minute chart more because I'll see more of these order blocks. And these are what I call stairs, okay? Liquidity stairs or liquidity steps. And again, it's just institutions pushing the market down, okay? So they start, we opened sideways, yada, yada. And there's institutions clearly wanted to push the market down and started putting in massive sell orders, which again pushed the orders down. All you need to know is, okay, we got a sell signal. Okay, you can enter a short position. On top of that, though, seeing these, especially two, three, four of these, it's just showing again that the institutions are pushing the market down. Okay, so yeah, we got a sell signal. Great. Okay. But on top of that, these order blocks are telling us, yes, not only do you have a sell signal, but there is aggressive selling going on. And as you can see, there was super, super aggressive selling. Um, um, I don't think I traded this day, unfortunately. I always seem to miss the real big ones. But yeah, so that's it in a nutshell. We're right about an hour. We got a few minutes left. If you guys have any questions on anything, but I think we nailed this class in terms of timing and all that stuff. Does
Colin,
I
I did have a question. I put it in the chat.
All right, let me give me a second. I'll look at it. Unless you want to
Well,
uh
it's yeah, just being able
I
to set an alert for the buy or sell signal from the orb
ah yeah, yeah, yeah.
to where it would,
It does
beep
not
or
work.
whatever. I have not been successful
Oh,
with
it
that.
doesn't work. Oh, good catch. Um, I'll look into that.
Okay.
And if I have to, I'll reach out to my guy in Pakistan to help me code that in. Because he coded the infinity indicator, and then I vibe coded the super orb. So
Okay.
yeah, I quote unquote saved money by coding it myself. But I don't think I really saved money in the long run because it took me hours and hours and hours and hours to code that thing. So that being said, I will, Brian. I'm going to make a note of that, but please, that's actually pretty important. So,
Yeah, you have to be looking at it when it comes
follow
up
if you don't mind, follow up um on
with
me
you.
with that
Okay.
also. Okay. But yeah, that's a really good catch, dude. So I'll make a note of that real quick. Alerts for trading view. Yeah, I mean it's easy if you're just watching the market all day, right? But
Right.
no, that would make things immensely easier for people. And by the way, guys, stuff like that, and I know Brian's been around for years now at this point, but stuff like that is the feedback that I need, help me help you, you know what I mean? I'm not going to take offense to it, like, oh, we don't have this feature. Okay, great, let's get it. You know what I mean? The more tools that I can provide to help the community, the more success we're going to have overall. So, thank you for that, Brian. Does anyone else have any other questions?
I got to jump. Thanks.
Cool. Was I pretty clear? How'd I do in terms of explaining things? Good. Any complaints? You guys are all muted, so, um, but all right. Hey, if you guys
Yeah,
don't have any
I'm good.
questions, good.
Good.
Did
Thank you.
that answer some questions that you had?
Yes.
Okay.
I,
Um, what I do want you to do, is if you do have more questions, and some of them I may just I already know what they are, and I'll cover them in the next class. But still, say, hey, you forgot to cover this, or I didn't see you mention this. If you guys would either message that in the chat message it to me so I can make sure I build that stuff into the next class. Then that would go a long way. But I appreciate you guys joining. And again, if you guys have any questions, just I prefer in the chat, but if it's something more personal or you're not comfortable in the chat, then just shoot it to me in a DM. So, all right. I appreciate you guys taking the time to hang out with me today. And again, we're gonna peel back the onion more in our class next month as well. I appreciate you guys joining, and I'll catch you on the next one. Thanks, guys.
Thank you.